SGOV is a great alternative to traditional money market mutual funds. But unlike money market mutual funds, SGOV does have some price fluctuation. Today we're going to take a look at what causes that price fluctuation and what you can expect going forward. This chart shows us the last 6 months for SGOV pricing. If you are new to investing in an ETF like SGOV and you've historically used money market mutual funds, this price movement may catch you off guard. So I want to show you what influences this price movement and what you can expect going forward. SGOV declares a dividend about the first of every month. When that dividend is declared, the share price drops. For the rest of the month, you'll notice the share price is going up and then it drops. Here's the dividend being declared. Then the share price is going up, dividends declared, share price drops. The share price is going up every month as a result of mark-to-market accounting for the underlying investment portfolio, which is all T-bills. The T-bills in SGOV are accruing interest daily, and BlackRock has to value the underlying investment portfolio at mark-to-market. As the interest accrues on those T-bills, the underlying investment is going up throughout the course of the month. Then they declare a dividend and the share price is going to drop to reflect the dividend being paid. Let's take a look at this on a spreadsheet. This data table will help us to understand how SGOV share price is affected by the monthly dividend declaration and what that means for you as a shareholder in SGOV. For example, July 31st, if you owned one share of SGOV, your share was worth $100.72 at the end of trading on July 31st. The following day, the dividend was declared at 0.36, 36 cents a share. SGOV price finished the day at $100.39. Here's where the share price fluctuation comes in. It's dropping. But keep in mind that you're going to receive, when the dividend is paid, this 0.362484 per share. So if you had owned SGOV prior to the dividend declaration, then your total position would be the dividend plus the price, and you would be at $100 spot 752 on August the 1st, compared to July 31st, where you were at $100.72. So your dividend plus price went up in value, even though the share price dropped. We see the same pattern at the end of August. August 29th, SGOV is worth $100.74. The next day, the share price drops to 100.39, but another 36-cent dividend. From August 29 to September 2nd, you went from 100.74 to 100.75. Then again, at the end of September, 100.7 for the price. The following day, it was adjusted to 100.37, but a 34-cent dividend is being paid. You went from 100.7 to 100.717, a slight increase. Now keep in mind, the dividend is not paid for another couple days. Typically, you'll see the dividend paid on the 4th of the month to the 6th of the month, somewhere in that window. But I want to draw your attention to the fact that if you add the dividend to the adjusted share price, you're going up in value typically. If you go and review all of the past dividend payments for SGOV relative to the share price, you're going to find this consistent pattern. Here's what drives the monthly increase in share price that we generally see with SGOV. When we looked at this chart here and you see the share price going up and up and up, and then the adjustment for the dividend, then going up and up and up, and the adjustment for the dividend, it's the underlying investments and the nature of those investments that causes the monthly share price gains in SGOV. T-bills. This is the top 10 holdings for SGOV as of October the 3rd, 2025. You can see the biggest holding is a November 18, 2025 0% coupon. That's a US T-bill. November 18 is when this T-bill comes due. Then you see the next biggest position is October 30th, then November 25th, November 12th, October 21, October 14, December 2nd, so on and so forth. These T-bills are accruing interest daily. BlackRock is marking them to market to their fair market value for the portfolio. And as the interest accrues, the fair market value is going to follow, and the value of the share price in SGOV is going to step up as we get closer and closer to these bills coming due at par value. This table shows us the difference for the par value versus the market value of the top 10 holdings for SGOV as of October the 9th, 2025. If we subtract the market value, which is what influences the share price, versus the par value, which is what these securities will come due at, we see that there is nearly $200 million of difference for the top 10 holdings, $194.4 million. The par value for the top 10 T-bills in SGOV is $46.08 billion. But the market value, which is what drives the share price, is only $45.8 billion. If BlackRock holds all of these T-bills until they mature, they are going to receive the par value in the portfolio. So all they have to do is hold these securities, and they're going to accrue interest over time and then come due at the par value. For example, this bill right here is currently worth, hypothetically in the market, $4.07 billion. But it's going to come due at $4.1 billion. That means that the portfolio is going to have a gain, if BlackRock holds it, of $26.69 million just on that one bill. So think about the share price going up over the course of the month. As these securities move closer and closer to expiration, their value is going up and up because they're going to come due at par, and that is moving the market value up, and it's moving the share price up over time. If you have questions about your investments, please give my office a call. We would be happy to give you a free second opinion on your portfolio. If you like this content, please share it with your friends. I hope this video was helpful. I hope it gets you thinking, helps you better analyze your investments, and overall improve your family's financial plan.